Everywhere. Adam Hewison here, president of INO.com and co-creator of MarketClub with your video market update for Wednesday, the 24th of April. The question is, can we trust this market? Ben Bernanke continues to pour money into the market, and that's one definite concern. What now for Apple after they announce their earnings? And also we'll be watching the gold and crude oil market. Plus we're watching Amazon that just announced a new product today that's going to come out. It's a desktop set. Imagine that, to stream internet videos. So let's start with gold. Gold has had a nice little rally here in the last several days. We've gone from just below the 350 actually down to as low as 1321, and we've had a nice big $100 rally, which seems like a lot, but look at how much we came down. This formation right here is not positive in my mind. This is what I think is going to happen. We're going to see this market, we talked about this, we have the sharp down move here. It's coming up like this. We think this is going to roll back over. This is a flag formation, usually indicating lower levels. So we've just gone from a very oversold condition. That's over with now. I think we'll see this market continue to be on the pressure. We're waiting for our trade triangles, which are currently green on the daily. We want that to turn red like this. Once it does, we'll be short this market once again for short-term traders. Longer-term traders, of course, are still short. So let's clear the screen and go to our next market. This is crude oil. Much the same pattern here in crude oil. Actually, the crude oil is going a little bit higher than I expected, but let's do a Fibonacci number on that. So let's scoop this in a little bit further. And let's take our Fibonacci tool, which is right here. Go from the highs here, pull this down, and there we go. So pretty much 91.57 is a 61.8% pullback. That is very close to where we are getting to right now. The last weekly was 92.15, so I think somewhere around those levels we would probably want to be short this market again, but I'd wait again for the weekly and the daily to match color. So we get the daily to a red level, then we go short again. So again, the longer term pattern for this market is lower, looking for a move back down to $80 a barrel. So let's go to our next market. This is the Eurodollar, which has come under pressure. You can see we have the longer term trend for the Eurodollar is still negative, the weekly is positive, and the daily is negative. So it's a trading range right now. We're at the low end of the trading range. We're just about to turn over on the MACD. You can see that right here. Actually just turned over. So I think we're going to see a little bit more a defensive posture in this market for the time being. We had the rally, which I think covered a lot of short covering rally here, but I think that's probably over with now, and we'll see this market once again resume its downward path. Looking at the Dow is stubbornly kind of hanging on, trying to go higher, but this is a market that's getting tired. It really is getting tired of being held up by the stimulus. And if you look at the move here, we'll put our Fibonacci tools in here again, from the highs to the lows. And let's just scope this in just a little bit closer so you can see. So there you have it. You pretty much got the 61.8% retracement, around 14,750. I think we're going to see this market continue to be on the defensive, and I would not be surprised to see it take out the lows that were here. 14,375 is a key level for us. If it goes through, then I want to be out of any intermediate long-term positions. So let's see how that plays out. Looking at the S&P, pretty much a picture of negativity there. We've had the little rally back up. Again, I'm sure that's a Fibonacci number we came very close to getting to. From the highs, just click on the high, drag down to the lows, and there you can see we just went a little bit higher than the Fibonacci number. Not unusual, but I think we've probably run the course in this market. Certainly, if you're an intermediate term trader with the weekly being red, you should be out of this market for the time being. So let's go to our next market, the NASDAQ. NASDAQ has a lot to do with Apple, of course, and here we are. We've seen the NASDAQ rally, much the same, very sharp rally, 3-day rally. Really not getting too excited about this market because it really hasn't gone anywhere when you think about it. We're really sort of the last, since March of this year, it's sort of gone sideways. So not too excited, but you should be on the sidelines with a red weekly triangle there, saying intermediate term traders should be on the sidelines. Here's Apple. Basically, we had a big rally last night over 425. Never saw that in the daytime hours. We are looking a little bit negative. We traded at 415 today. The high is 415.25. back down close to $400. I think this market is just going to meander down. If we see this market close on Friday below 390, that would be a very, very negative case for Apple. That's the lowest close we've seen so far on this downward move. Still no signs of an Apple product, so that's something to watch. Amazon is going to announce, or has announced today, a top TV top set to stream internet videos to your home. They hope to have this out by the end of the year. Now here's the key thing for Amazon, in my opinion, and that's this line right here, just around these levels right here. If we go over this level, let's just do a close on, we get a better idea of where that is. So let's just pull that down here to this. So I would say probably a close over 276 would be very, very positive in my mind, indicating this market can go quite a bit higher. We're currently trading at 268, so another $10 higher, and I think you've got something going on the upside right now. I'd rather do that. Time-wise, we are all in agreement with our trade triangles, the monthly, the daily, and the weekly, all green, plus 90 strong trend. So if you wanted to take a position, this would not be a bad time to take a position in Amazon, as all of our trade triangles are, in fact, green. So moving on to our next market, this is Netflix. Netflix basically has gotten to our target zone. We were looking for around the 325, 320 level. We certainly got that today. The high of the market, 324.30. A little bit of a negative news for Netflix because of what Amazon's going to do. That's going to be a competitor. I would expect this market's going to be a little bit on the defensive, but Netflix is still a good product, and the trend is clearly up in this market. So moving on to, that's it for the day. Actually, I thought we had one more, but we don't. That's our forecast and our broadcast for the day. And I'm Adam Hewison for Market Club. I will see you tomorrow or the next day with a new video. If you haven't checked in for our Apple poll, please do that. Vote. We'd like to hear what you have to say. And also watch that Apple video that we made especially for you, showing you how the trade triangles cleaned up trading Apple. So I'll see you tomorrow. Take care.